So hello everyone guys, if you ever bought at support only to watch the market crash straight through it, you are not alone. In fact, 90% of traders lose money at support and resistance levels. And today I'm going to show you exactly why and how smart money uses these levels to take your money. Stay until the end because I'll reveal where one pattern institutions never want you to know. So now let's go to the chart and define our support and resistance levels, and I will show you one example why it doesn't work like in trading book. Here I place a line on the our support and resistance levels, and if you don't know how to define them, it's the lowest point and the highest point of the sideways movement or any our movement. Top level is resistance and support is the bottom level, because in the books the authors want you to believe what the price will jump from the support level. Don't let the price go down, and the resistance levels because it resists the price to go up, and in the books we will show the examples of the price are gonna always go down from the resistance levels and up from the support level. And now I will show you why it doesn't work like that on this simple example. And if we are going to look by the smart money logic, by the smart money concept, we want to see the stop losses and the liquidity what price are gonna grab. And in the smart money concept, the best way to place your stop losses and take profits, and the best way to place take profits in smart money concept is on the liquidity pools and our point of interest. So where here we can see liquidity zones what price in smart money concept are gonna grab. Yes, of course, on the support and resistance levels, because the retail traders place where stop losses near them, above them, behind them, and the price are gonna grab them to get the power for future movement. So here's the price are near our support level, and the retail trader are gonna take a rectangle, define the zone like that, and here is gonna open a deal with short stop loss near the support level and take profit above here, because in his mind the price are gonna touch the resistance level and go down again. So here he gets a blue, and after that the price grab all liquidity on the left side and his deal are gonna be unsuccessful. And after that the price in smart money concept is grabs liquidity, gets the power money of retail traders, and after that it is gonna up after liquidity grab, and of course we has here after movement. So in this case, for example, you don't need to trade short on your open long positions, but from some point of interest zones, for example like that, for this Fuji, from this Fuji, and from this Fuji. And if the price don't get your entry point, you don't need to trade, because you need to work on your psychology. So now let's repeat again. Textbook trading says buy at support, sell at resistance. Sound easy, right? But where is the problem? Institutions know about thousands of retail traders are doing the exact same thing, and when too many people expect a bounce, guess what? The market breaks through instead. Support and resistance don't fail because we are fake. They fail because smart money is hunting liquidity. Most traders place where stop loss right under support or above the resistance. To smart money, that's like free cash sitting on the table. We push price just far enough to trigger your stop, grab liquidity, and then reverse back in the original direction. So now I'm going to show you how to trade support and resistance levels. So here we can see an impulsive movement which are formed, and in smart money logic here you can define a Fuji from which the price are gonna bounce and get a good growth. And now let's define the support and resistance levels. Here we have our resistance and here the support level. In smart money we don't define support and resistance levels, we only watch for liquidity grabs pool and of course discount and premium market. Here I measured them because I want to show you why it doesn't work again on the real chart example. So now let's think what non-trader are going to do. He will wait for the price coming for the with zone, his support level, and after that he will open a position like that, is a stop loss here and take profit here, and let's watch what will happen. It can be one successful deal, but in the long distance it doesn't work like that. Okay, here key get a good deal, but our traders who trade by the same strategy here, we opened a short position which liquidated. No, we don't get their money. It's just a question of luck. If you are lucky enough, it will work for you, of course. But repeat again, in the long distance, it doesn't work like that. So what smart money traders are going to do? We have our Fiji, which we have mentioned before, and we can see what the price get a few times reaction from it and from our zones in this Fiji. And here the sideways movement are formed. We are going to define our premium and discount zone. I told you about that in the previous videos, and of course we have a trend movement. We are going to open a long deal. So here in the optimal trading entry point we have our zone of Fiji on the higher time frame, and we are going to open low position like that. Is a take profit here on the liquidity grab, and risk stop loss is a Fiji. We can make it more conservative, but we don't get enough risk reward ratio. And one more important thing, if the liquidity grab happened, doesn't count like liquidity pool in the future. Now it is on these weeks. So now let's watch what will happen. Here we get our due, and here it has a successful one. But in this case, when the price get a liquidity win, we can move our take profit here and get a better amount of risk reward ratio, and of course it is give us a chance to get a more conservative stop loss. So now let's watch on this example. Next week has our support level, sorry, resistance level. Here support level, here this meanings doesn't count. So what we can see here, the minor break of structure here to the downtrend movement, and we can expect the downtrend movement here. It is not gonna be so impulsive after the liquidity grab, or the price are gonna bounce from these meanings, but the global trend are bullish, and we are waiting for the entering uptrend movement. And we can see the Fiji here, what will help us to open the local deal on the lower time frames. Fiji here, but I don't think the price are gonna touch them, and I think it's already touched. So the last zone we can see the order block forming, because after that the best way to trade in this situation, we can open from here after the grab of liquidity. But it is not such a good idea, because it don't has any good point of entry and a point of stop loss. And the good deal, I think, will open for this Fiji with conservative loss, with conservative stop loss of the liquidity grab, and take profit like that at all. Let's watch what will happen. So as I said before, we open the deal like that is not a very good idea. We're not gonna make like that, and the price not come to our point of entry zone, so it happens. Don't worry about that in your future tradings. And after the big impulsive movement, we need to define our new support and resistance levels. For that, we are going to wait for the formations. For example, here we can get our liquidity grabs and the good entry point from here, and the best way to open the deal in this case is place the conservative stop loss like that and take profit here, but it has a bad risk reward ratio, so we need to move a little bit our deal. And don't forget to define premium and discount market. So our zone are the optimal trading entry point, and we are waiting for two movements, swapping with liquidity or getting with liquidity. So the price get our deal, and here already we can fix our 50% and move our stop loss to the zero loss point, and we are already win this deal. So here we can fix our 80% of deal. So here already you need to fix the deal because it is too long and our formations are formed, and situations like that happens because you are too long with the deal and you need to fix by part on this means, on this means, and on this means. So I show you example. In this deal, if you'll fix by part, move your stop loss to the zero loss point, you are not going to lose money, you already earn a huge amount of money. And here the price grab all the liquidity down, and I think that we need to wait for the new formations here because we don't know how the trader gonna. So now we can see downtrend movement, local downtrend movement. We need to place our liquidity grab here. Here we can see another liquidity grab, and of course here. So the basic logic, the price wanna move for the liquidity grabs here, liquidity grabs here, and liquidity grabs here. It is fun. Now let's watch for the points from which we can open good deal. So here we can see a good order block because the price to reverse with minutes, but it's already happened. And if we opened our deal earlier for the order block, the liquidity grabs happened, and here we already can fix 70% of our deal and move our stop loss to the 0 point. And here we have our successful deal. So the all liquidity grabbed here, and I think the price need to grab this liquidity, and the movement reversed to the uptrend here. We can place our Fuji and the place deal like that because we want to see how the price grab all this liquidity. So the price don't get our deal, we don't get money here, but all our deals are successful here. So I watch you. So I showed you a best algorithm to trade support and resistance levels, but in the smart money concept here we trade liquidity grabs and sideways movement. Follow my Telegram channel, I'm gonna drop all the videos about this lesson, and goodbye.